Hello and welcome back to Bunnex Investment Group. This is the third lecture in our updated free version course. We talked about the market manipulations in part 1 and then levels in part 2. So you need to watch these for you to have the right foundation. But before we jump into the whole video, please be sure to check out our free Telegram channel where we share setups, advice, as well as announcements using only the link in the description box below. So on that note, there are several people coming with different links, Telegram links, some website links. They are all scammers. Please, if you want to engage with our services, use the links in the description box below only. So in this video, we are going to talk about the standard market sessions, the market behavior in each market session, then trading around the time of manipulations, then the times to analyze the markets, as well as the times to actually get in front of your screen. Before we delve into our today's lecture, we just have this announcement on the November Black Friday discount. For those who would love to get our services, we have a discount running throughout November. For $85, you will get a recorded full masterclass, which was actually taken from the October masterclass, then a peak identification template that simplifies your trading by giving you possible peak points, then 1 year access to our Telegram VIP signals channel where we share signals, that is entries, stop losses, and their targets. So to get this, use the link in the description below to contact us in the channel that you'll be led to. So the first topic, or the first part that we are going to talk about in this lecture, is the standard market session. So we are going to talk about two elements that leaves no room for discretion, which are price and time. So the most important things in whatever type of trading, whether you're trading bonds, shares, indices, commodities, stocks, or anything, time and price are the most important elements. So the main advantage of knowing this is the fact that you will not need to spend hours in front of charts to try to find entry points, since you'd be knowing the exact times to come or the exact tradable times. You will need not to freeze in front of your computers all the time. So Forex is the world's largest financial market and is open 24 hours a day, 5 days a week. However, it is only a few hours that are tradable. The opening and closing times of the markets are indicated considering the GMT, meaning the Greenwich Mean Time. So before we define the standard market sessions, you must pay attention to the time displayed on your charts by your broker, as it is not always the same as GMT. So we come from different parts of the world, as well as our broker servers. So you need to check how many hours from the GMT is your broker time. So by broker time, we are referring to times that are below on this part of your trading platform. So if you are not understanding these times, you need to email your broker asking what time zone are they using and how many hours away from the GMT are they actually referring to. Then here comes the most important part, which is actually the trading sessions. There are several trading sessions depending on several market contexts, but in our methodology, we only recognize 3 sessions. So these 3 sessions are the London, the New York, and the Asian session. So among these 3 sessions, only 2 are tradable, which are the London and the New York. So as mentioned in part 1, the Forex arena is other players that have the goal to benefit from liquidity introduced by retail traders. So we defined these guys as market makers, and they are the sole guys who will be stalking in the war process. We will be trying to trade in line with them and follow whatever pattern they issue to us. So market makers have trading desks, and within these work shifts. Whenever session changes, managers change as well. By managers, we are referring to those who will be behind the trading desks. So during changeover, they hold what we call changeover discussions, and within these discussions, they will be discussing on trade volume, contracts accumulated, which will be being evaluated. So the managers for the Asian session are solely responsible for the contracts accumulation that will provide liquidity in the other two standard sessions. So that's the basic reason why we do not trade in the Asian session. It's solely meant to accumulate contracts as well as take more retail traders. They will be needing more guys who are going to lose and provide liquidity that will be utilized in the other two sessions of the day. So the London session offers the daily long sustained run, and usually the New York session offers the daily reversal. So trading in the London involves trading reversal patterns, which are peaks, whereas the New York involves trading trend continuation patterns. So this is just a standard of how we know these sessions, but it's not always the case that in the London we have peaks and in the New York we have continuation patterns. Sometimes they actually interchange here and there. What you just need to know and understand is the cycle. So this is just a snippet from the charts, and it shows how these sessions actually relate to each other. So in this case, the ones in the white box are the Asian session, and as you can see, there is no lateral movement or one directional movement. It's actually meant to accumulate contracts, and then in the London session, that is where we have a lateral or a one-sided move, a long sustained run, and after that long sustained run, we can see that in the New York session, in this case, there was a trend continuation pattern, which will actually lead us to the next Asian session. And within the New York session, we had the same experience as this one, as well as the New York session. Then in this part as well. So the Asian session is mainly focusing on accumulation of contracts, which then will be hit stops during session changeover, whilst these managers are actually in discussion of handover takeover. So what we have been waiting for is actually to know the times to trade, to take your trades. So if you have been trading otherwise, please try to follow these times and see how you will dramatically change your results. So London session starts at 7 a.m. GMT, which is Greenwich Mean Time. The New York session starts at 1 GMT, Greenwich Mean Time as well. So you should plan your daily trades 30 minutes before each session opens. So it means at 6:30 GMT you should have your trades in plan. That is, you have made your rough notes in your diary. What are you going to be looking at? Which pairs are you going to be trading? Your watch list, which has fewer pairs to look at, and as well as 12:30 GMT, which is 12 noon GMT. You should as well have your plan for the US session or the New York session. So trade entry should be done 15 minutes after session opening, as enough market volume would have built up. So the most important thing is actually to have enough volume for you to find trading opportunities. On that note, we come to the end of our third lecture. Our fourth lecture will be talking on how to select currency pairs, and we'll be talking on the best currency pairs for small accounts, which is actually what the majority has in our community. On that note, have a good day, and please don't forget to like and subscribe, as well as checking out our free Telegram channel.